Hi, I'm Toby Vernon, a partner with Simpatico Studios and host of the Food and Agriculture channel on Simpatico TV. The global food and agriculture sector is faced with a complex set of intersecting challenges, sustainably feeding a growing population amid accelerating climate change and declining farmland and farmer populations. Each week, I host live stream talk shows featuring farmers and ranchers, researchers, policymakers, investors, and business and technology developers. Together, we're growing a community of leaders that are addressing food and ag's most vexing problems, one innovative solution at a time. And I invite you to join us in the live audience or as a guest. I'm glad you're here. Enjoy the conversation. Good afternoon, and thanks for joining me. My guest today is Dr. Steve Suppan of the Institute for Agriculture and Trade Policy. Dr. Suppan has served as senior policy analyst at IATP since 1994, and I'm excited to talk with him because today we're looking at the 2020 Growing Climate Solutions Act, which is currently awaiting a vote in the U.S. Congress. We're unpacking key features of the bill, and Dr. Suppan is going to provide his analysis of the legislation's ability to meet the climate and economic goals it's aiming for using the tools and provisions described in the bill. Dr. Suppan, it's great to talk with you today. How are you doing?
I'm fine. Thank you very much, Toby, and thank you to Simpatico's audience for tuning in to this broadcast.
Well, it's great to have you. We've got a lot to cover today. Agriculture, trade, and policy is something that's obviously super important as we look at evolving into a food system and a U.S. and agricultural system that's more sustainable, that's better for farmers and better for consumers too. And you guys write a lot about trade policy, about commodities, and most recently, you've published a really important paper that analyzes these 5 big segments of agricultural finance, like crop and livestock insurance and agricultural credit products, bonds to finance agricultural lending, commodity future contract, trading, and that's all super important. But today we're going to talk about the 2020 Growing Climate Solutions Act that's in the Senate. It's been proposed both in the House and the Senate, and that's just a small part of that big paper that you recently put out. So if you would just sort of frame the importance of that act and why it's so important for us to talk about today.
Well, I basically, selected that or proposed and selected that topic. Glad that you agreed to talk about it because it's an act that, represents a high degree of consensus among agribusiness and the non-agricultural corporations that would buy agriculture-based carbon emissions offset credits. And so, in view of the consensus achieved versus, less consensus for other climate change related legislation, I thought it would be good to talk about that in the context of the U.S. farm economy, because a lot of that support derives from a pretty dire state in U.S. farm level economy.
So what is the sort of composition of the U.S. farm economy right now? Where are incomes coming from, and how are farmers doing?
Well, so one of the sources of information that I go to a lot is the Federal Reserve Bank research on the agricultural economy, in part because under the Trump administration, the Economic Research Service has been shrunken. Let's just put it that way. So there's a chart that I go to a lot showing the relationship between prices received for agricultural commodities and the cost of those commodities, prices paid for inputs for land rental, for credit, and so on and so forth. And the unhappy fact of the matter, and you can, go into greater detail on a per commodity basis, is that since 2014, prices at the farm gate level have been underwater. That is below the cost of production, and in some cases quite a bit below the cost of production. And so, just looking at this chart from the Federal Reserve Bank, the 11th district in Minnesota, North Dakota, South Dakota, and Iowa, you get a sense for just how underwater farms are. And some of those farms have the equity to withstand these kind of prices, especially have inherited land, inherited machinery, and so on and so forth. But the big question is, how long is it before that equity erodes and you can no longer service the interest on your your debt, on your principal?
Yeah. So we understand that there's some serious economic issues within the farm economy with farmers in general, but the Growing Climate Solutions Act is also obviously oriented and aiming to meet some serious climate goals as well. So how much primary production in agriculture and forestry really contribute to greenhouse gases, would you say?
So, the Environmental Protection Agency emissions inventory, which, tracks, it was published in 2019, tracks emissions up through 2017 in all sectors. For agriculture and forestry, primary production is around 11% of total US emissions. But if you extend that into the food system, then the emissions resulting from transportation, packaging of food, and so on and so forth goes up to between 19 to 29%, according to the Council for International Agricultural Research. So we're talking about a very, very significant contribution to greenhouse gases.
Yeah, I mean, that's serious. Do you think that the main features of the Growing Climate Solutions Act are really in their current draft? Are they really equipped to address the greenhouse gas emissions issue as we see it? Well,
I was going to go into a little more detail about the bill later in our interview, but first, it's a bill that's relatively primitive in the sense that, for example, there's not a real enforcement mechanism. There's not a lot of detail in the bill yet, and so I don't want to be unfair to, how it might evolve in the next Congress. But its principal features are that it's a voluntary program, depending on voluntary carbon emissions markets, and the price for these emissions markets is very, very low, and it's hard to see under what conditions this act would take the current emissions prices at around $3 a metric ton and take them up to the social cost of carbon at around $50 a metric ton, and do so within 10 years. I mean, we're really talking about a very fast closing window on avoiding radically destabilizing climate change. So that's my kind of overall assessment. I mean, one thing that's characteristic now of U.S. agricultural policy is that we're spending a lot more on ad hoc disaster payments than we are on climate change related agriculture measures. And in this, in this sense, the priorities are very much misplaced, and the part of the U.S. net farm income that corresponds government payments is going to hit a record 36% this year. And yet there's still talk in the next fiscal year of asking for more payments. Now, not all those are related to climate change. Some are directly COVID-related payments.
Mm-hmm.
Some are payments, the so-called market facilitation program payments are related to compensation for trade lost to bad trade policy. But the history is that usually when you have a large increase in government payments, that increase, it's hard for it to come down as quickly as it increased.
Yeah, we don't see a lot of in normal times prior to this administration, particularly a lot of decreases in budget amounts. Typically, we only see greater levels of expenditure. But let's zoom out just a little bit and talk about the act. Can you sort of unpack the main features of the Growing Climate Solutions Act?
So, the way that the act is organized is first to define a need. In press statements, the need is very much to provide farmers with another source of revenue. Because the amount of mitigation of greenhouse gases resulting from the emissions offset projects that this bill would facilitate is very much unknown. And so the main features, the bill presumes that carbon credit accountants and traders would look to agriculture and forestry for many more offset credits if only they understood agricultural and forestry operations that would create these offset credits. And so the bill provides for a USDA website that would basically serve as kind of electronic middleman or middle person between farmers and the technical assistance providers that the bill would pay for. And then the third party, what they call their verifiers, not certifiers, but verifiers of emissions reductions that would then be converted into tradable emissions offset credits. The mechanism sounds pretty clean until you get into the issue of who oversees the technical assistance providers, who certifies the third party verifiers of the offset credits, and what is the market going to be for these voluntary offset credits. The offset market prices at quite a bit a discount compared to the California allowance credits. I tried to find a chart of offset emission prices in the United States, but I couldn't find one that was not proprietary. But generally speaking, the emissions offset credits are at 10 to 15% below the price of the allowances, and the allowances are really bolstered by state legislation in California and Quebec. There's just so many factors that will go into whether or not voluntary prices at this very, very current low level would basically increase 16 times by 2030, which is what some of the proponents of this of the Growing Climate Solutions Plan claim. And when you take a look at the backers, when you're having a large, variety of backers from, major input suppliers like Corteva and traders like Cargill and Land O'Lakes, and then some very large environmental NGOs, some carbon consultancy shops. Because nothing is required, there's no cap. There's just these payments that are supposed to be coming from companies that need to reduce their greenhouse gas emissions for the purpose of being able to report to investors and lenders and credit rating agencies that they're doing so.
Yeah.
And the theory is that because buying these offset credits is going to be a lot cheaper than directly investing in technologies to reduce their greenhouse gases along their supply chains, that there will be a very definite and quickly growing market for these voluntary offset credits. But there are a lot of if-then suppositions about the growth of such markets.
Yeah. So why is the cost of those the going rate for those credits so low?
Well, I think partially right now it's because first, what is the quality of the emissions offset projects? There's been a huge amount of let's just say dubious offset projects of dubious scientific integrity. Some of them have been straight up fraudulent. The International Police Agency, Interpol, has has a task force that's identified fraudulent carbon emissions offset credits as a very ripe source of crime. These offset credits would differ from what Interpol investigates in the sense that they're not from international sources. They're from U.S. farmland sources, and so presumably they will be better overseen. But you still have the problem that emissions offset credits are they're temporary. By definition, they're impermanent. You don't know to what degree their permanence is. The degree of permanence varies so much from one soil type to another, from one manner of livestock production to another, and there's no standards for judging, for verifying, much less certifying that emissions have been reduced.
Yeah, it seems like we're really in the infancy of being able to establish some baseline understanding around actual carbon sequestration and different, even just establishing understanding around the different forms of carbon and how well they're sequestered. But you talked about some of the key stakeholders in this bill. We know that it's in the Senate. We know that it's in the House, indicating that there's some pretty strong bipartisan support. There's also some pretty strong support among commodities interests and food processors. How are we to understand why there's so much support for this bill?
It doesn't require them to change their business model at all. I mean, so nothing is required of them, from the viewpoint of corporate reputational risk. The Growing Corporate Solutions Act is all upside. What kind of revenue stream is produced from this very much will depend on, how many acres do you control? This is going to be very much an acreage-based bill. And it also is going to have, a very important factor that that is not, discussed until you get into the text of the bill, is what is the baseline from which emissions reductions are calculated. And that is to be set by the USDA secretary. And it is, there's presumably going to be some kind of scientific advisory board, although that's not yet determined. And I think, when you look at any kind of voluntary payment scheme, it's going to go up against the basic structure of the Farm Bill, in which commodity programs and the crop insurance payments or subsidy payments are determined in terms of acreage and historical yield. And so as a farmer looking at growing climate solutions, you're going to have to ask yourself, am I going to lose more revenue from the Farm Bill payments, the commodity program payments, subsidies for my crop insurance, versus this kind of uncertain revenue stream, uncertain prices, especially if the forecast buyers for these offset credits do not appear. And if you're, let's say, to be charitable, that the price goes up, after the bill is implemented and is up on its feet in 2025. Let's say the price goes up to $9 or even $10 a ton. What will the farmers' cut of that be?
Right.
I mean, there's going to be carbon accountants. There's going to be trading fees.
There's a lot of hand-me-downs.
Yeah, there's a huge number of middlemen.
Mm-hmm.
So that's and that's, I guess, I don't think I'm being uncharitable. I mean, I just think that is a factor that is not that has not been appreciated by the farmer organizations that have supported this bill right now.
Yeah.
Because USDA's projections for major row crops, major feed crops, the farm gate prices is continued to be low through 2029. Very sophisticated econometric projections from the Economics Research Service. Costs keep going up. I mean, the supposedly the saving grace of U.S. industrial scale agriculture is precision agriculture technologies, and these involve not just genetically engineered seeds and proprietary pesticides for those seeds, maybe even nanotechnology enabled fertilizers and agri-drones and more expensive farm machinery. So all of that points to increases in costs, whereas the overall USDA projection for these row crop prices is flat prices at best, and these prices right now are below cost production, meaning that there's going to be more government support payments. And then the question comes, well, after, let's assume that within 10 years or so, the COVID impacted economy is fully recovered. Well, at that point, then, presumably the government support payments are going to start to drop.
Yeah. So, we've talked about the problem with the carbon credit markets as a major criticism of the bill. Prices are too low. The economic benefit just doesn't really stand to hit farmers where they need it the most, right? We've talked about the problems with really not being able to verify the extent to which practices proposed are really gonna positively affect climate. This bill isn't perfect. We know that, right? Is it worth supporting as a stepping stone into something greater? Is IATP's position that it's a good enough start, or do you have enough umbrage with the bill as it's currently drafted that it might not be worth really pursuing further?
I think there's kind of an X factor that I don't know how to judge, and that is the desire for any bipartisan legislation. The Republicans and Democrats have agreed on so little in agricultural legislation, except the need to spend more money. So you've got, a greater. There's not, very much in the way of new policy, and there's a lot of fights over money. So I can see where there would be just this desire to get some kind of bipartisan action on climate change. Whether or not it's particularly effective in mitigation. Of course, Growing Climate Solutions doesn't directly address in any way adaptation to climate change.
Which stands on its face to be a serious issue, right?
Well, you read the fourth climate assessment, the fourth national climate assessment that came out last year, and a lot of the natural resource solutions for industrialized agriculture are going to be disappearing within 10 to 20 years. The huge dependence on subterranean irrigation for wheat, corn, soy in the Midwest is not going to be sustainable. So there's big factors like that. I think there's the argument that, well, this is better than nothing. I just don't think that is true. Generally speaking, in economics, they say the more direct the instrument, the more likely the impact will have. And so in Cory Booker's Climate Stewardship Act does not have that degree of industry support, agribusiness industry support, because it requires agricultural practices of farmers to receive payments for environmental services that would reduce the purchase of agrochemical inputs. And it would also probably in combination with an expansion of the conservation stewardship program take land out of production. And you'd say, well, but this is awful because you're going to producing less product. It'd be harder to get a loan because you won't have that amount of acreage. But when you're losing money on every acre of corn, soy, and wheat that you plant, every acre of cotton, especially, how sustainable an economic model is that?
That's right.
We don't. I can understand the sympathy, for the bill, both on the part of the buyers of the emissions offset credits and on the part of farmers who are desperate for any sort of revenue. But it is there's a lot of X factors in it that really make it unlikely that the bill will be successful either economically or in terms of mitigation.
There's a part of me that is just happy to see some legislation that is really talking explicitly about agriculture's role in climate at all. And really, I think we agree that we're not going far enough. That maybe this bill isn't hitting it. Maybe it is a good starting point for a much louder discussion. And I think that brings us sort of to this temporary pause in the broader conversation on the Simpatico Food and Agriculture channel. I think that we're going to get a lot more into policies like this in the future. I think this is really just a starting point for us. And I'm so grateful for you joining us, Dr. Suppan. And we do have a bunch of questions that came through in the community room. I didn't get a chance to bring into our conversation at this segment, but if you'll hold tight with me, we're going to get into those questions here in the Just Chatting segment. But thank you so much for joining me today, Dr. Suppan. It's great. I really look forward to having you on in the future because, as I said, I think we're just getting started on this topic.
Yes, we are, and actually a little bit too late. Thank you very much.
We can agree on that too. Okay,
looking forward to the chat.
Yeah, just pause there, and we'll see you on the other side there.
Okay.